This is Pranav Rao from Smartkarma's research team. It's a pleasure to introduce Philippe Damas, the head of Supply Chain Advisors at Drewry Shipping Consultants. Philippe Damas is in charge of Drewry Supply Chain Advisors, the logistics practice of the Drewry Group. Prior to joining Drewry in 2005, Philippe worked for CMA CGM and the Container Shipping Consortium Cobra in various management and financial control roles until 1990. He then spent the 1990s analyzing the logistics policies of exporters, importers, and of logistics service providers when working with American Shipper and Containerization International. Philip then became a founding director of the shipping research and database company Compare Data. At Drewry, Philip has advised exporters, importers, lenders, and ports on logistics, freight rates, sea freight procurement, supply chains, and markets. Philip, over to you.
Thank you very much, and good afternoon, everybody. Thank you to Smartkarma for inviting me to present. So I prepared a short presentation for you, which I will try to share now. Is it showing yet?
Yes, it is. We're good to go.
Okay, thank you very much. Okay, so I would like to share with you some insights into the shipping line infrastructure and related supply chain disruptions caused by COVID-19. And I look specifically at what the main mode of international transportation of goods, which is container shipping. So my brief agenda today will be just first a short intro on my company, Drewry. Then I will look at some of the key and major operational disruptions of supply chains, particularly on the international transport side. And I will look at a related problem or risk, which is the deterioration of the international shipping lines' finances. And finally, I will share with you some insights that we have on the financial health check of international shipping lines, and then look forward to Q&As. So first of all, who are we? So Drewry, we are a global consultancy company specialized in international maritime transport. And the insight I share with you will come partly from our research business units, where we do maritime research in all shipping sectors, and we also do maritime financial research for equity investors and lenders. So I have a lot of numbers on this for you. And then I run one of our two consultancy companies or business units. So we work for industry stakeholders like exporters, importers, and shipping companies and freight forwarders. So I have some good everyday input on what's happening today in the market. So first, I look at the demand shock. What we are seeing now in terms of commerce, global commerce, is that in the first quarter of this year, there has been an approximate 5% fall in international transactions, international volumes. And as we speak now, in the second quarter, we are seeing the biggest shock, biggest downturn we've seen for many years. We estimate the volumes are down by approximately 15%. And based on the macroeconomic forecasts and our own forecast, we think this downturn in global commerce and international supply chains will last until approximately the end of this year. So the first quarter demand was down about 5%. The next three quarters, quarter two to quarter four, we estimate a reduction in volumes of about 9%. So a significant shock to the system, and I'll come back to this later. And now there's a sort of consensus on the picture of trade and volumes for this year, but I have to warn you, based on our Drewry container forecaster, that we and everybody else have very little confidence and visibility into what will happen next year. For next year, depending on the shape of the virus and the shape of the recovery, there could be a lot of different scenarios, ranging from a further reduction in volumes of traded products to a sharp increase or recovery of volumes. So as we put there, volatility, the only certainty, you have to be prepared for these major swings in volumes and all that it means in terms of inventory and planning. The next big point I wanted to share with you was what we are seeing in terms of market and operational disruptions. So first, this chart there shows you the reduction in the number of port calls. So the number of times a ship calls at a particular port for 5 recent weeks versus the same 5 recent weeks last year. And you can see in some ports, the reduction was as high as 40%. Cape Town and South Africa has effectively seen the ports shut to all but essential goods. And then there were a number of other ports, including JNPT, Nhava Sheva near Mumbai in India, where because of increased compliance checks and other reasons and the lockdown, the number of calls dropped by 30%. On average, you can see based on something like 15 different major ports, the number of port calls dropped by 18% in these recent weeks. So it was a very significant reduction in the usual conveyor belt system of international shipping. So all this became very much reduced and unreliable and disrupted. And then I share with you some examples of the different shocks that we saw, what it meant in terms of disruptions. So you had ports being closed down, except for essential products. Warehouses were full, and you had other problems like orders cancelled, that the previous speaker mentioned, cargoes abandoned, sailings cancelled, force majeure, where a number of transport providers said they could no longer abide by their previous contracts, and then seafarers were stranded because they could not be repatriated to their other location. So far, all these disruptions have been managed without too much damage, but they were certainly costly for all those involved. And I would suggest, if you want to track what's happening to the global transport system, have a look at our Drewry weekly cancelled sailings and ship waiting time tracker, which gives you the temperature or barometer of disruptions week by week. Another important factor in these disruptions are the number of sailings which have been cancelled. Now, we all heard that the airline industry has been severely cut back. The same happened to the international maritime transport industry, where, as this chart shows, in May, approximately 18% or nearly a fifth of all international sailings on the major east-west routes were cancelled. So if you were an exporter or importer, you had to suddenly juggle you were planning to ship on a particular day with a particular shipping line. This sailing was cancelled. You had to rearrange it, rebook it, what we call rollovers. And all this had an impact on delays and transits and lead times. Now, a number of our customers, exporters, are having to build additional lead time in their orders and in their deliveries because the system is not as efficient as it used to be. Again, this comes from the Drewry weekly sailings tracker. And the good news is that looking forward at June sailings, we are seeing that the percentage of cancelled sailings will reduce from 18% to probably around 14%. So an improvement in the transportation infrastructure. Now I'll move to a different area of the business, and this is the health or the risks of the international shipping lines. As you may know, international transport of containerized goods is provided by a group of about 11 or 12 major carriers. And the question now is how strong or how resilient are these major carriers as they enter this huge financial and economic shock. So you may be aware of the Z-scores or Z-scores of Professor Altman, which are a metric which measures the risk of bankruptcy based on P&L and balance sheet numbers only. and we have tracked this for many, many years. As you can see, the bright red bar shows you the average Z score, sorry, over time. Back in 2009, it was about 1.2, then it deteriorated a bit, and then it's still about 1.2, 1.3 now, when really this 1.2, 1.3 means that the average shipping line is currently in a distress zone, a weak balance sheet, a weak financial situation. And the best shipping lines are in what we call the gray zone, but the worst shipping lines, you can see, has a score of below 0, which is frankly very worrying. So many people in the industry are starting to ask themselves, are these shipping lines going to last until the end of the crisis? And you only have to go back 4 years in 2016, where there was, sorry, the previous major bankruptcy of Hanjin of Korea, which had a multi-billion impact on exporters and importers, because when it went bankrupt, thousands of containers, thousands of orders were stranded and delayed, and it was a major problem for international trade. And the risk now is that we may be moving into a situation where other remaining big shipping lines will be distressed. Another way of looking at this is to look at all the major carriers, how many are in a relatively safe position and how many are in a distress position. And again, based on our Drewry CNR Shipper Insight measurements, I can share with you that now 8 of the 11 major shipping lines are in a distress position, so a vast majority of them, and only 3 of the major shipping lines are in a gray zone or stable position. So this is not clearly a good situation, particularly as we are only just entering the financial crisis. So if you bear in mind that, as I mentioned, we expect volumes this year to drop by 8%, this will mean a shortfall of revenue of about $15 billion this year for the shipping industry. Are these carriers going to be able to absorb a $15 billion reduction in volumes when, on an average year, these shipping lines together make an EBIT profit of about $3 billion? So you compare the $15 billion reduction in revenue versus $3 billion average profit, it shows the magnitude of the shock for the industry. Fortunately, as you may know, a number of shipping lines have recently secured new finance. For example, the Korean banks have said they would support the Korean carrier Hyundai, and the French government has agreed to guarantee a major loan of over $1 billion to the biggest French carrier. So there are some support there, but on average, the average shipping lines I mentioned is not in a strong situation. So bearing in that, so I'm suggesting to lenders or investors or users of the shipping lines to have a close look at the financial situation of these providers. If you are an exporter or importer, consider adding a backup carrier or consider using a forwarder who typically are financially stronger than these shipping lines, who are heavily asset-based and heavily indebted. Now, I'll share with you also the findings of our container shipping financial health check analysis, which is actually released this week, compiled by our maritime financial research colleagues. And the message we found, having analyzed something like 12 major shipping lines, is that the container industry is likely to be the shipping sector the most affected by the COVID-19 pandemic, with the global box trade said to be heavily impacted, as I just mentioned, because container shipping is the main mode to move consumer products and some of the industrial products and supply chains. So that's where all the shock of consumer product reduction is happening. We found, as I also showed earlier with Z scores, that the financial health of this industry, even before or at the start of the downturn, is weak, and the reduction in volumes will make it even weaker. Some other specific findings, looking at our samples of 14 container shipping lines, is that few of them, frankly, inspire any confidence based on financial or balance sheet strength. Why? Because already most of them have seen a deterioration in their balance sheet with increased gearing. As you may know, a number of shipping lines have been expanded recently, and they are over-leveraged because they have acquired other companies trying to integrate vertically with other companies. So they are not in the best shape to start with. And then another factor, as you may know, is there has been a new standard concerning lease accounting, which required the companies to show lease obligations, not as an off-balance sheet item, but on the balance sheet. So the level of debts based on this now looks higher and probably more representative. And therefore, these high levels of debt not only damage the long-term profitability and shareholder returns, but also have significant risks for other key stakeholders. So I would refer you to the health check for more information on this. So I will conclude, I think I'm using about my time. So I've tried to show there is a continued instability of the market with impacts on international supply chains. As I mentioned, volumes are way down, the reliability of the system is way down, and it's requiring or implying additional costs for all the stakeholders. We are seeing some clarity emerging on the volumes. So as I mentioned, we are now in the deepest year-on-year reduction second quarter, but the reduction will reduce or lessen a bit by the end of this year. And very likely, this is the worst container shipping industry slump since 2009. We expect that the shipping lines will continue to cancel sailings on what we call an industrial scale, very, very large scale, with some improvement expected in June versus May. And they definitely expect the carrier financing will deteriorate. The high levels of debt I mentioned before will damage long-term profitability and returns, and also have many negative implications for key stakeholders groups. So we advise you to be careful and look particularly at which company you work with or invest in, and maybe ask for additional information on their finances, or consider using backup providers. And now I would want to know if there's any questions.
Thank you for that, Philippe. I think I can start off with the first question, and this is regarding your views on potential bankruptcies with major international shipping lines. Is that something you see as a possibility given the stretched finances?
Yes, so fortunately, or unfortunately, the most exposed shipping lines, and there are 3 of them, currently have government or national supporters. So if they were completely in the private sector, they would be very exposed. But as things stand, they will be backed up and supported by the various governments. So we believe that there's no immediate risk of a bankruptcy if the crisis is contained to this year. But if the crisis is protracted and goes into next year, then there's serious risk.
Okay. I think a follow-up question to that's come through is there are probably 2 or 3 companies who have a relatively better financial position. Do you expect them to embark on acquisitions in this environment?
So some of the companies who are stronger have said they're always open to opportunities. So if you believe them, this is possible. But personally, because as I mentioned, they're already highly leveraged, I think it's probably on their will for major acquisitions. It's possible they may buy some smaller carriers.
Understood. There's a question around your views on the offshore shipping industry and what your outlook is.
I'm sorry, I don't cover offshore sure this by my I can't answer that.
All right, no problems. I think one thing you did mention was around the bankruptcy of Hanjin in 2016. Um, I want to understand, what does a bankruptcy in the shipping line industry mean? Does that mean that that shipper stops sailing, or does it mean that basically what's the view going out if and when there is a bankruptcy in the shipping line?
Okay. First of all, yes, immediately stop. It means that the ships stop sailing. So there's a reduction in capacity and reduction in the ability of exporters to reach their markets. But also it means that all of the products which are currently at sea or in transit are left in limbo. So for example, if I'm exporting, say, medicines to inland USA, and my product is halfway between China and the USA, it will take me months to recover my product. And effectively, I may lose my customer or I may lose my order. So there's a major risk to inventory in transit. And when, yeah, I was going to say, when something 500,000 containers full of products which were left in limbo for months.
Okay, that's to hide what the risks are of dealing with a liner that is potentially in trouble. I think another question I had was regarding China. There's been a lot of news about how China's recovery is kind of well and truly underway. I wanted to get a sense of whether your data trackers for shipping and waiting times is kind of indicative of that, or if you've got a different picture.
Yes, absolutely. And I was actually surprised. We find that China is nearly back to the previous levels before January. So we see China seems to be months ahead of everybody, and the frequency of service is as high as it used to be before the crisis.
Okay.
What we don't know is whether the ships are full, but certainly they the volumes have recovered from January, February, March already.
Understood. And can I understand that this is imports into China, or is this exports out of China?
I don't have the details. I suspect it's probably mainly exports, but I don't know.
Okay, sure, no problem. Let's see. I don't think we've got too many other questions at this time. I was trying to get a sense for when you say that 2020 is probably going to be the worst container shipping slump since 2009, what that, in your view, is going to translate into, apart from, say, bankruptcies. Is there a likely need for the industry to transform itself in some shape or form to kind of become more sustainable, in your view?
Yeah, that's a great question, Pranav. So what we have seen in every major crisis of the container shipping sector is that there was a significant consolidation of providers after the shocks. And I think this will likely happen again because this industry is highly leveraged, not making money. And it is possible that the national governments decide that it is an essential industry, a bit like the airline industry, and they decide that they need a number of national or regional champions. So it is not inconceivable that, for example, the Taiwanese government may decide we want a super Taiwanese national carrier, which would help Taiwan Inc., replacing currently there are 3 or 4 shipping lines. So we may see a different political treatment of shipping lines in much stronger carriers, in which case it would be much more consolidated, a bit like the US airline industry. And if this happens, then the profitability of the companies would be much higher than it is today. where frankly, as things stand, this industry does not look strong and not attractive for investors. So maybe we're going to move to a different model.
Understood. And if you had to guesstimate on who the holders of all of the debt are for some of these international carriers, who would you think are the primary investors here?
Oh, so you're asking me. I should really get my financial colleagues on this. I don't know these details. But maybe if anybody in the audience has questions on this, I could get the data.
Sure, no problems. I think we've had another question around consolidation, and if you've got a view on if there's a potential succession to the NOL, OOIL type acquisitions in this environment. If there was a possibility for an acquisition, would you have a thought on who an acquirer might be and who a target might be?
Yes, so it's partly speculative, but as I mentioned, I don't think it would be a big company acquiring another big company now. Maybe with one exception. I think what's more likely is that a big company will acquire a medium company like a Pacific International Lines in Singapore or some of the medium carriers. However, it is not inconceivable, but as I mentioned, Taiwan could decide to let Evergreen or One High, which are two private companies, acquire Yangming, which is a national company, and maybe engineer a merger between the three top Taiwanese carriers. So these, I think, could be a likely consolidation.
Okay, I think that's good color, and it's a good way for us to wrap up. Thanks so much for your time, Philippe, and this insightful presentation on global shipping lines and the shipping industry. It was a pleasure to have you on, and I think we're coming up to time on the next presentation, so I'll hand over to the host. Thanks, Philippe.
Thank you very much.